Earnings season continues with another big week. There are a ton of S&P 500 stocks reporting earnings on Tuesday, February 3rd, and we're going to look at what I would say are the 8 most popular of the bunch among us retail traders. So we're going to look at price action, market timing, and momentum because I'm Hima ready, and that's what I do. So let's start with AMD. Now, AMD has been essentially consolidating, but is looking to renew higher, and it looks good to me. So long as it stays above the January 20th low, I still think it's on track to reach about $310 per share by early March. SMCI, another tech stock, this one is trading lower. It is attempting to base when you look at its perspective of the past 2 years. When we hone into the recent action, you can see that while above the January 13th and 14th lows, it has room to renew higher. It would need to climb above the January 23rd high to set the stage probably for a return to about $45 a share. All right, looking at PayPal, it is also sort of down in the dumps, and it has just a clear downtrend persisting with no sight of relief. Even if we zoom in, there's just a little bit of recovery happening now, but we need to see a move above the January 22nd high. Otherwise, it could make its way further lower towards $50 a share. ENPH. Now, this is a stock that has been attempting to reaccumulate shares for many months now, since last summer, but it hasn't cleared that September 23rd high, which is at about $41 per share. So I would like to see a daily closing break above $41 per share to get excited about this stock for an initial run up to maybe $55. But if it doesn't do that and it drops back below the January 20th low, I'd watch out for weakness back towards about $30 a share. All right, Chipotle. It has closed the gap that it experienced back in October and is now rolling over a bit. So while it stays above the January 2nd low, I would offer the possibility that it might regroup and move higher. But given the history of this stock over the past couple of years, that would be something that if you were going to go long, you'd want to be at a very low risk setup, meaning close to the low of the candle and your stop below there. Also, you'd want to see the RSI Power Zones return to bull support. Otherwise, it is potentially going to bust through that 36.72 to support and head back towards about $33 a share. MDLZ, this is another stock that was beaten up and has a strong recovery. So when you see this happen, you end up in this decision point of, all right, do I continue to ride this recovery higher, or was it short term and the bears may resume? Well, that's where you always want to look at where your trend is and your extreme peaks and troughs on your momentum indicator. Mine is the RSI Power Zones. So I can see that we're still beneath the peak associated with the September high that's maintaining this longer term downtrend. So sure, we could see recovery, but until it gets above $65 a share roughly, I wouldn't think about it as a long-term play. From $58.70 though to that price, right, there could be a trade in motion, especially if you put your stop below the January 21st low. So that's how you want to look at it. You want to pay attention to the short-term trend that's unfolding in the immediate bars and candles, but you also need to be aware of where you are in that bigger picture. Looking at Take-Two Interactive gaming stock, it already had a move last Friday where it pushed substantially lower. So we've got to see how that shakes out, but it did become pretty oversold. So this is one where I don't think there's going to be a trade anytime soon because we have this longer term correction unfolding, but this prior uptrend, I want to see how it shakes out. Basically, I want to see how things last over a few days in terms of the relationship to the August 8th low, whether we see a closing break below that or we stay above it. All right, and then we have Amgen. So this stock has been having a nice steady move higher. When you zoom out, you can see that this finally cleared the high from July of 2024, which was capping the action. It is pulling back at the moment, but I think that if we can get a little bit of a deeper pullback, maybe to $330 area, that might be a good re-entry long point with the stop below the low from December 11th, all with goals for further upside towards about $370 a share. All right, if you found value in this video, some useful perhaps stock ideas to add to your portfolio, or a lesson revisiting a trend, short-term and long-term, go ahead and hit that like button and I'll catch you in the next video.